please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
10 up on the Nifty. No, it's going into flat terrain now. Nifty is starting flat and Sensex is up just about 20 now.
We are staying with 8 to 10% growth forecast, and that's kind of the range.
It's going to be a very weak listing for ICICI Securities, 15% knockdown. At 439 or 440, it would still be trading at about 22 times forward FY19. The luxury market, of course, JLR numbers have looked very good. After many months, we've seen a pickup over there, both month on month and year on year.
We are at the day's lowest point, 10,150 is where the Nifty is at, and the low is about 10,161.
A weak day, 365 down on the Sensex, 120 down on the Nifty. The severe punishment was reserved for actually the Bank Nifty, which was down about 170 points.
The tit-for-tat tariff war between China and the United States rattles Dalal Street and global markets. Sensex and Nifty tumble over 1%.
Shares in Hong Kong and South Korea see some sharp cuts, even as Shanghai ends only marginally in the red. European markets see a tepid opening as fears of a full-blown trade war looms large.
Reports suggest merchant power prices have shot up 25% in the first 3 months of 2018. Stocks like IEX, PTC and Tata Power gain in trade before closing in the red in tandem with markets.
Tata Motors gains in an otherwise weak market. JLR sales in North America see a significant pickup in March after disappointing for the last few months.
And alumina prices rise by over $100 per ton in March. Nalco stock gets a boost in trade. ICICI Securities has a disappointing debut, listing with a cut of 13% from its issue price of 520 rupees. Well, those were the top 5 headlines from what was a seesaw day of trading. Hello and welcome to Markets Today Talkback, the show where we tell you all about 8 hours of hectic trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Ekta Batra. Hi Ekta.
Hi Lata. Well, over the next 30 minutes, we will be discussing the top 5 market headlines, and our experts will answer all of your stock queries as well. Joining us to answer your stock queries this evening, we have Geojit Financial's Gaurang Shah on the fundamentals, and our technical expert this evening is Mitesh Thakkar. Thanks, gentlemen, for joining in. But before we get to the queries for this evening, Lata, I wanted your opinion in terms of how exactly you would look at today's trade, because it was conversely opposite to what happened yesterday. The global jitters seem to have overwhelmed.
Yeah, well, more a narration rather than my opinion. You know, the Monday-Tuesday trade did look like India was a huge outperformer. Well, not a huge, a reasonable outperformer compared to Asian stocks. But it looked a little surprising because you had lots of negative news. The banking news is always something to be worried about. And then you had the PMI numbers, which were a 7-month low. FIIs continued to sell, although we had Monday, Tuesday, good performance. So it always looked like somebody is propping up the market, and the trade news was enough that import tariffs by China was enough to bring this down. It always looked like a skittish rise, and you could hear the thud when it fell. And as you said in the headlines, it was banking stocks and mid-cap stocks that took the knock. They were traditionally the weak chaps who had gotten pulled up over the last 48 hours, and that's where the knock came. But anything specific you noticed in terms of stocks?
Yes, absolutely. You did mention financials, so I'm going to start the chat with mentioning HDFC Bank and HDFC. Both of those lost and actually weighed down on the index quite significantly. Larsen and Toubro, also a heavyweight, was down 2.5%. Metals lost a lot of sheen, probably because of the news coming in from China. Tata Steel, Hindalco, Vedanta, all of them in the red. And UPL, Titan, Bajaj Finserv, just a couple of other stocks from the index which really lost significantly today. However, the stocks which managed to buck the trend and really drive ahead were the auto stocks. So Tata Motors at the high point, close to the high point, Eicher Motors, Bajaj Finance, all of these stocks which managed to gain. F&O losers included something like Adani Enterprises, HCC, PC Jewelers, Voltas, all of these stocks which lost out, and a couple of gainers included a couple of these ADAG stocks, Anil Ambani stocks, Reliance Power, Reliance Naval, which were in the green. The listing listings didn't have too much of a good session. For example, ICICI Securities down 14%.
Oh yes. So what next? Let's first ask the tech guru, Mitesh. Clearly, long trades have not played out, and I guess your stop losses must have protected traders at 10,120, 30 thereabouts. What's the next trade?
Yeah. Green, Lata, I think below 10,200, I think there wasn't much of an point, or at least the immediate direction wasn't upside to warrant continuation of long trade. So I think while we've had a rally from 10,100, I think the trailing stop losses on stocks as well as indexes got triggered close at about 10,200. So we've kind of retreated. Once we start breaking below 10,100, I think then we could possibly look at a retest of 99.50, 99.60 levels. So I think in that sense, for the timing, we can watch out 10,100. But the position of the intraday indicator is slightly on the weaker side with this strong fall which happened today. And most likely, I think, the market should break below this levels of 10,100 and drop another 130, 40 points. Having said that, the bank Nifty is also very at a very important support level of 24,100, 24,050. Below that, I think there's another 300-400 points fall which could happen.
Okay. Well, we'll keep that on board, but it's the second headline of the day that's most important and that pulled all markets. Global markets were under pressure as trade war fears resurfaced, with China planning to impose reciprocal taxes on US goods worth $50 billion. China plans to impose 25% tax on US soybean, chemicals and US vehicles. Among Asian indices, only the Nikkei barely managed to close in the green because Nikkei closed before the tariffs were announced. European markets, of course, are in the red. Well, joining us to decode, what we should make of this latest round of tariff hikes by China on US goods is Yan Den, Head of Research at Ashmore Investment Management. Thank you very much for joining us, Yan. Well, do these rekindle fears, or are these again more noise and less action?
No, I think it's important to understand both what this means, but also the limitations of this. Clearly, these are negative headlines. It is bad for global growth when countries engage in protectionism, and when they retaliate, it just makes the problem worse. However, there are some silver linings here. First of all, China's retaliation is clearly matching, but only matching, not surpassing the U.S. measures. So China is basically hitting back with the same force that they're getting hit, but they're choosing not to hit any harder. And I think therein lies a clear element of restraint. The Chinese have also indicated that they're willing to talk. So they're basically playing tough in response to tough policies from the U.S. and saying, look, we are keeping our options open, we can talk. I think it's also important to understand that this is a very bilateral trade war. I don't think China has any interest in extending its policies to third countries. And I think it's also going to be limited in terms of the U.S. ability to have meaningful tariffs to large sections of the rest of the world.
So, Yan, in your opinion, is this then enough to get them to the negotiating table and put an end to, say, all of this back and forth?
No, I think this is going to play out over a longer period of time. None of them have reached the point where they're willing to back down yet. These policies will be implemented over several weeks rather than sort of immediately. So we're going to have to see how this plays out. What typically ends up happening as the pain begins to get felt across the different sectors that are exposed to these tariffs is that counter-lobbying efforts begin to manifest themselves, and then slowly the pressure mounts on the various administrations, both in China and the United States, and then eventually you get to a point where it stops. But I don't think that we've reached that point yet. I think we will see further worsening of the rhetoric going forward.
Exactly. I mean, hasn't the rhetoric or the bark been much worse than the bite on both sides? US, after imposing aluminum and steel tariffs, excluded probably 65% of the exporting countries. Likewise, China, as you just pointed out, it has been a restrained reaction. Do global markets have to react furiously as they are? Is there really a danger to growth?
Yes, no, I think one has to make a very clear distinction here between the market reaction and the economic implications.
Okay.
The economic implications here are relatively small. The reason why there's quite a strong reaction in the financial markets, particularly in the U.S. equity market, is simply that market is extremely expensive. And we're now seeing a deterioration in the quality of economic policy. And remember, if you invested in U.S. stocks over the past 6-7 years, you would have made more than 300% return. But if you look forward from here, you know, with monetary policy being tightened and economic policy clearly deteriorating at the margin, then you've got to ask yourself, am I going to make another 300% return, or can I make more money elsewhere?
Okay.
I think there's quite a lot of willingness to take some chips off the table here on the headlines, but we need to distinguish clearly between that and the underlying economic impact, which, as a result of these tariffs that we've seen so far, is going to be relatively limited.
Okay, a final question then, Jan. Since chips have taken off the table on Indian stocks, this question, there was one enterprising analyst who said that people will start preferring countries which are less dependent on exports, and India is one of them. Where's India in your pecking order?
Well, I think there's validity to that argument in that India is a relatively closed economy. However, Indian stocks are also, unfortunately, rather expensive compared to stocks in many other emerging market countries. So you sort of have the valuation argument going against you, even though the relatively closed nature of the Indian economy is probably something that will protect India. So a little bit of a double-edged sword there, I think.
All right, Jan, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's the fundamental perspective coming in from Ashmore. We need to take a break now, but stay tuned. Our experts Mitesh and Gaurang will be answering all of your stock queries once we're back. Welcome back. Well, straight to the third headline today. It's looking like a good summer ahead for power producers and traders, as reports suggest that merchant power prices have shot up 25% in the fourth quarter of FY18. Experts don't expect the peak power deficit to improve anytime soon. Stocks such as IEC, IEX, PTC and Tata Power gained in trade before closing in the red, which was in tandem with the market.
All right. And with that, we invite questions from the House. And we have one, M. Lakshman. He has sent us a question via SMS on PTC India. He says he has 500 shares of the company, bought at 95 rupees. He bought the stock a week back, wants to know if he should hold or exit. Oh, just a week back looks like a short-term investment. I think that will go to Mitesh.
Yeah, so I think the stock has been declining for quite some time and now very close to support levels. I think you should keep a stop below 85.1. It was a recent low on the 23rd of March, and I think some base building might happen over here. And once it starts getting past this price of 95.96, I think a trading rally can happen, which could see the stock head towards 104, 105 on the upside, which could be a good exit point.
Gaurang, what would you recommend to Lakshman? And if you could just break it up and give us a sense in terms of any power company that you like at current levels.
So, this is more of a trading company, Ekta, and first of all, good evening to all of you all. We do have a positive coverage on PTC India. The issue is time horizon and the acquisition price, along with the news flow which surrounds the power generating, transmission, distribution sector. We remain optimistic on this company. We are also optimistic on two power distribution and transmission companies, namely Power Grid as well as RAC. And amongst the power generating names, Ekta, we are positive on Tata Power, NTPC and CESC. But these are all, longish gestation investment idea, given the issues that the power sector and transmission distribution sector has to deal with right now. And not to forget, you have multiple state elections and a big general elections. This could be a short to medium term overhang, but with 2-year plus time horizon, we like all these names.
Yeah, I can imagine. After you get elected, you are free to raise power tariffs, I guess. So with a 2-year horizon, things may work out. Fourth headline of the day. Tata Motors gained in an otherwise weak market as JLR, that's Jaguar Land Rover, sales in North America saw a significant pickup in the month of March after disappointing for the last several months. The stock closed over 3.5% in the green. Sonia Sharma here with all the details. Sonia.
Well, you know, Tata Motors has been losing a lot of ground over the last many months. In fact, it was the big underperformer in the auto space. Finally, after many months, we are seeing a recovery as far as the Jaguar Land Rover North America sales are concerned. Now, North America is a big market for Jaguar Land Rover. 20% of their revenues comes from there. And this time, both month-on-month and year-on-year, we've seen a pickup in sales. So overall, on a month-on-month basis, it's about a 10% growth. On a year-on-year basis, it's almost a 60%, on a month-on-month basis, it's a 60% growth. And on a year-on-year basis, it's almost a 10% growth that we've seen. Now, the Jaguar business is still under pressure, but it's the Land Rover business that has picked up quite a bit. Land Rover US sales up almost about 40-odd%. If you look at the trend as well, the last many months we've seen an average of around 9 to 10,000 units, but this time there's been a big surge there. Back to you.
Okay, all right, Sonia, thanks very much for that. We have a caller now. Himanshu Das is calling us from Kolkata with a question on Tata Motors. Himanshu, hi.
Hello.
Aapka sawal?
Actually, madam, I bought some 400 Tata Motors.
Yeah.
200 I have sold out at profit.
Okay.
And again, another 100 I sold at a loss of 10,000 rupees.
Okay.
And another 100 now, the average price is 441.
Okay.
Now I am holding. And this profits of sold out Tata Motors I have diverted to Bodal Chemical.
What chemical?
Bodal.
Acha. Okay.
Bodal Chemical.
Okay. So you want to know whether you should stay or get out of Tata Motors. Mitesh, what are the technical levels?
So, Lata, my sense is that the stock has completed a correction. I think at least for the short to medium term, the downside might be over at levels of 320 and that low has been formed. So it remains a buy or an accumulate. I think eventually with some choppiness, the stock should head towards 385, 400, possibly even 425. That would be a good exit point.
Okay. Gaurang, we've seen quite a bit of recovery in Tata Motors for this week. It's up around 8 to 10%. Do you think that it's prudent to stay on? For example, our caller had a buy price of 441.
So, Ekta, we believe that these are great levels to even average Tata Motors, and as a brokerage house, we've been maintaining a positive view on Tata Motors when I think most of the market participants were avoiding the stock. We believed in the theme on the domestic front with respect to the PV launches that they've made, and in the recently concluded auto show, they had unveiled 3 new variants and 3 more to follow in coming couple of months. Their commercial vehicle business has also turned around, and so is the case for the export market, as Sonia was pointing out with respect to JLR. Now, if I have to put all these things in perspective and also put a tailwind of domestic defense business, we are maintaining a target of 480. So this investor, I would advise to stay invested, and maybe at 350 or maybe tomorrow morning or day after you get a downtake, you can even average as well, and same would be the advice for a fresh investor as well.
Okay, so there you are, Mr. Das. You could average and wait, but even the technical expert thinks that you should get 385 for sure, and maybe even 425 with some luck. Well, Bodal Chemicals, quickly, Mitesh, can you come in on Bodal Chemicals? It's lately seeing a lot of volume.
Yeah, so I think it's corrected and come now to big support levels of 120, managed to bounce back from there. I think it might do a range of 120 to about 150. I don't have a longer term view on this, but short term it looks like 120, 150 is the range which the stock might play out.
Okay, all right. Now the final headline of the day, the top stocks in news. Nalco was in focus as alumina prices have gained more than $100 per ton in March on the back of a 50% production cut in the world's largest refinery in Brazil. The stock closed nearly 3% in the green. Meanwhile, it was a disappointing debut for ICICI Securities. The stock listed with a cut of 13% from its issue price of 520, and it closed over 14% in the red at around 445.
Okay, I think we have an SMS from a viewer, Muttu K, who has Nalco shares, 500 of them, bought at 78 rupees 3 months back. Is a long-term investor, wants to know if he should hold or sell the stock. Long-term, Gaurang, should he stay with Nalco?
I would definitely agree, yes, and advise the same, Lata, and even average at maybe current levels or on bad days. Now the entire metal pack has seen a downturn. There is positivity with domestic flows. There is positivity in terms of the China news that has come out, and little bit of concern with what the 45th president is doing and President Xi Jinping is doing. But if I have to look at domestic concern, well, we are extremely positive on some of the select metal names, and Nalco happens to be one of them.
All right. Thank you very much, Gaurang and Mitesh, for answering questions of our viewers. We have to wrap up this edition of Markets Today Talk Back. On that note, let's leave you with some opinion that we got from another veteran fund manager, Vetri Subramaniam of UTI AMC.
I wouldn't really, classify the pullback in valuations as having pulled it into what you would call cheap territory. It's not as expensive as it used to be a few months ago. But, as a fund manager, I would certainly say that, some of the falls in individual stocks have been much sharper than what we've seen in the broad market, or at least in the narrow market, I would say, the blue chip indices. And therefore, there has been an opportunity to go in and, pick up stocks where you have a little bit more of comfort in terms of what you're paying for valuations and for growth. But I think the broad market I would really not categorize as having done a deep enough correction to pull down valuations into what you would really call as attractive territory.